Wall Street has always had a problem with boring. Financial media doesn't want quiet, steady businesses. They want drama. They want the next revolutionary technology, the next disruptive startup, the next company that promises to change the world. Excitement sells. Excitement gets clicks. But after decades of investing, I've learned something most people never do. Boring is where the money is made. Boring is what builds lasting wealth. And boring is what lets you sleep peacefully at night while your capital compounds year after year. That's exactly why I recently added to 4 of the most boring positions in my portfolio. Not because I expect them to double next year, not because they'll ever be featured on magazine covers, but because they represent the kinds of businesses that quietly create generational wealth for patient investors. And once you understand why these businesses work, you'll stop chasing hot stocks and start building a portfolio that actually works. Let me start with a simple story. In 1972, we bought a small candy company called C's Candies for $25 million. It wasn't exciting. No technology, no rapid growth. Just chocolate sold through company-owned stores in California. The financial press ignored it completely. But over the next 50 years, that boring little business generated more than $2 billion in pre-tax profits. Not by reinventing itself, but by doing the same simple thing well, year after year. Strong brand loyalty, pricing power, low capital needs, and steady demand. That's what boring looks like. The first boring position I added to is insurance, specifically property and casualty insurance. Insurance might be dull, but it has one of the most powerful business models ever created. Customers pay premiums up front and claims are paid later. In the meantime, the company invests that money. This is called float. And when insurance is run properly, that float costs nothing, or even less than nothing. Today, the insurance businesses I own control well over $100 billion in float. That's capital we can invest for decades. Right now, insurance is especially attractive. Premiums are rising across the industry. Inflation, natural disasters, and legal costs have forced pricing higher. That means more premium, more float, and more capital to invest. With disciplined underwriting, this becomes a compounding machine. And because insurance is boring, most investors ignore it. The second boring position I added to is railroads. Railroads are old. The technology hasn't changed much in a century, but that's exactly why they're so valuable. There are only a handful of major railroads, and each one controls its own territory. You can't just start a new railroad. The cost, regulation, and logistics make it nearly impossible. This creates permanent competitive advantages. Railroads have pricing power, inflation protection, and massive cash flow. They move freight more efficiently than trucks and pass rising costs directly to customers. Over time, efficiency has improved. Operating ratios have fallen, and more cash flows to shareholders. Railroads aren't exciting, but they quietly get better every year. The third boring position is utilities. Utilities provide electricity and gas, services people cannot live without. Demand is stable in good times and bad. During recessions, people may cut spending, but they still pay their electric bills. Utilities operate as regulated monopolies. In exchange for serving an exclusive territory, they're allowed to earn fair returns on invested capital. Today, utilities are entering a powerful investment cycle. Data centers, electric vehicles, renewable energy, and grid modernization require enormous capital investment. Regulators allow utilities to earn returns on these investments, which means growing earnings and growing dividends. Utilities have paid dividends for generations, and they continue to be one of the most reliable income sources in the market. The fourth boring position is consumer staples, food, beverages, and household products. These businesses sell things people buy regardless of the economy. Strong brands create loyalty that lasts decades. When costs rise, prices rise too, and consumers keep buying. These companies generate enormous free cash flow and return it to shareholders through dividends and buybacks. Consumer staples may not grow fast, but they grow consistently. As emerging markets develop, billions of people enter the middle class and begin buying branded products. This slow, steady global expansion has been playing out for decades, and it's far from over. So why do boring businesses work so well? The answer is predictability. When you can reasonably predict what a business will look like 10 or 20 years from now, you can invest with confidence. Exciting businesses promise massive growth, but they're unpredictable. Many fail. Boring businesses don't surprise you. They just keep working. Boring also protects you from large losses. Losing 50% requires 100% gain just to break even. Avoiding big losses is more important than chasing big wins. Insurance companies, railroads, utilities, and consumer staples rarely go to zero. Their downside protection is one of their greatest strengths. Dividends play a critical role too. Dividends are real cash. They enforce discipline on management. They allow compounding without selling shares. And when reinvested, they dramatically accelerate long-term returns. Many boring companies have raised dividends for 40, 50, even 60 consecutive years. There's also a time advantage. Most investors think in months. Boring businesses compound over decades. When you're willing to wait longer than others, you gain a structural edge. You can buy when boredom pushes prices down and hold, while value quietly accumulates. Boring investing isn't flashy. It won't impress anyone at a cocktail party, but it works. It has always worked. The path to wealth isn't excitement, it's patience, discipline, and time. Find boring businesses with durable advantages. Buy them at reasonable prices. Reinvest the dividends. Ignore the noise. Let compounding do the work. That's the power of boring.